Well, there's an old Wall Street adage that says that as January goes, so goes the year, meaning that if stocks end the month of January higher, they end the year higher. You know, the internet tells me that that's true 90% of the time. So will it happen this year? Well, we'll talk about that and a lot more with the host of Street Talk Live and Street Talk Advisors, Lance Roberts. Lance, let's start with stocks. All of the sudden, it's peaches and cream. Everything's wonderful out there. We started off the year on a great note.
Exactly right. And of course, you know, we had a couple of things going last year. Last year's January was higher, and everybody expected the year to end higher. Of course, we ended flat,
yeah,
basically for the year. You know, there's a lot of things that are going on. It's been very headline driven. Eurozone, debt ceiling debate here, what's going on with the economy. That's really been impacting stocks a lot. But we had a lot of selling last year, massive redemptions. Investors redeemed basically 39 weeks last year were selling equity funds. So lots of cash on the sidelines. So mutual fund managers had to get that money put back to work. So that's why the first day of the year, we had a nice big pop. Now,
it's amazing how that works.
Yeah. So we'll have to see if that can be sustained, though. That's going to be the question here.
And what do you think? I mean, is it a legitimate rally, or is it just well,
it's too soon to tell right now. We're still very much in what's called a trading range. We've just been bouncing up and down. We haven't gone anywhere. It's been very frustrating. Lots of volatility for investors. So next few days will tell us a lot of what's going on.
Excellent. Okay, let's talk about the real estate market. Right. Real estate market, you know, we've had some good news, some bad news from time to time. Nothing super, you know, terrific. Where do you see that going to 2012?
Nationwide, you're going to see prices go down some more. Probably got another 10 to 12% decline in house prices. We just have a massive amount of inventory sitting on the ground. And then, of course, that doesn't even include all the inventory sitting on the bank's balance sheets in terms of foreclosures and delinquencies. Houston, where we live, obviously, we're in a much better position here because of the oil and gas industry. We really live in a bubble, and we need to be appreciative of that. So house prices here, they'll hold up okay, but nationwide, we're going to see some more pressure.
So if somebody's thinking about buying a house here locally, it's no reason not to do that.
It's no reason not to do it, but, you know, always negotiate. There's a lot of inventory here, so just don't go pay, you know, list price for a house. You know, barter and negotiate and get yourself a good deal, because with interest rates at 4%, as interest rates will rise in the future, as interest rates go up, the value of the house will go down.
Yes.
There's a correlation to that. So don't overpay for the house, especially if you're not going to live in it long term.
Well, let's talk about those interest rates. They've been, you know, the Federal Reserve rate, you know, has set this near zero, you know, for such a long time. Mortgage rates are 4%. Right. Will that last through this year, do you think?
Yeah, absolutely. Interest rates are going to remain suppressed at least through probably 2013, if not even longer than that. The problem here is simply that interest rates are a function of how we manage our money. So credit cards, mortgage interest payments, loans of any type, if interest rates go up from the Federal Reserve, those interest rates go up. And if you're trying to restart the economy, which is what we're trying to do, we're trying to get people put back to work. If you raise interest rates, that lowers productivity. So interest rates are going to remain suppressed for a while.
They're going to stay put for a while. Because you mentioned the Eurozone before, because of that crisis that's been going on over there, the dollar had a surprise rally near the end of the year, and gold prices went down significantly from like 1,900 to 1,500. What do you think is going to happen this year? Can the dollar stay super strong?
You know, I do. I expect actually the dollar to do a little bit better this year, simply because we have not solved the problem in the Eurozone. The crisis is still there. Very likely sometime between February and March, we'll see all the agreements that were put into place last year that supposedly saved the economy. Those will fall apart because basically as a union, they don't have the ability to be cohesive. The United States is a union of states, and we have one monetary bank that basically guides the whole policy for the country. They've got 18 different banks trying to guide policy, and that's just never going to work. So the prediction this year is really that probably we might see the demise of the Eurozone as a whole in some form. It probably won't make this year in the same form that it currently was, and that we're going to see more issues in terms of debts and potential defaults. Greece back in the limelight. Interest rates on Italian bonds back up over 7%. That's unsustainable. There's going to be more problems.
So is that bearish for gold? Does that mean gold's not going to shoot up again?
You know, gold's going to be in a trading range. Last August, we wrote about the fact that we just had a parabolic spike in gold, and it's where the price of gold just went right through the roof. We've got to consolidate that for a while, and that's what's been happening. And so gold this year, probably not a great performer, but if things really start to come apart here in the States. Another big debt ceiling debate, which is coming up. We've got basically budget issues coming up in September, no budget from Congress, and the election. Any of those could certainly put fear into the markets and drive gold prices up.
Oil prices, about $103 a barrel over the last couple of days.
Yep.
Where do you see that headed?
Oil prices probably going higher. Stuff going on in Iran is not a good thing. And of course, any pressure there on supply and expectations of supply and demand are going to drive oil prices up. The one thing we had in the last couple of quarters that's helped the consumer is that oil prices corrected pretty sharply during the summer. We got to the 70s. Gas prices came down. That was about a $70 billion tax cut for the average American.
Just with the lower gas prices?
Just with lower gas prices. With oil prices over 100, gas prices will go up. And so that's going to impede consumer spending this year, and we're expecting a weaker economy. So.
All right, finally, the big story of the year, the presidential election. What impact do you think that would have on the economy? Because, it's, whether the Democrats win, if Obama gets a second term, or if the Republicans come in, that could have a huge impact.
Yeah, I'm not sure it impacts it either way. The problem here is that we have a structural issue. Now, my expectation is that whoever gets elected is going to be faced with a massive amount of structural problems that we haven't addressed. We elected this whole Tea Party group to come in, and they were going to adhere to the Constitution, and we were going to start cutting spending. We just crossed $15 trillion in debt. We're now we're in excess of 100% of debt to GDP. So we haven't done anything at this point. We've got to start doing that. Austerity slows economic growth. So look for a slower economic environment, or kind of a sluggish environment. Jobs will probably be, somewhat stable. Don't look for a lot of unemployment increases, but don't look for a lot of job growth either.
Well, it sounds like things may stay sort of stagnant. That's better than crashing. So that's a good thing. Thanks, Lance.
Like I said, my thing, 2012 is going to look a lot like 2011.
Right. And Melissa, Lance had a good headline on his website. It's something to the effect of, if Armageddon didn't happen,
it's a win.
That's a win.
So creative.